Welcome to Capital Link's Trending News podcast series. In this series, we have the opportunity to discuss with company management on recent news and announcements they have made. I'm Nicolas, Bornozis, president of Capital Link, and we have with us today Dr. Loukas, Barmparis, the president of Safe Bulkers Inc. Our discussion will touch upon the company's Q2 2023 results briefly, and mainly will focus on Safe Bulkers development, strategy, and the dry bulk sector outlook. A quick reminder on the disclaimer that our podcasts are provided purely for informational and educational purposes. They do not constitute investment advice or investment advice of any kind, and Capital Link bears no responsibility for their content. As a reminder, Safe Bulkers is an international provider of marine dry bulk transportation services, transporting bulk cargoes, particularly coal, grain, and iron ore, along worldwide shipping routes for some of the world's largest users of marine dry bulk transportation services. The current fleet is comprised of 44 vessels on the water, with a additional new building order book of 8 vessels scheduled for delivery between now and the Q2 of 2025. And the company's common stock trades on the New York Stock Exchange under the ticker SB. And in addition, there are 2 preferred stock issues, Series C and D, trading again the New York Stock Exchange. And Capital Link is the investor relations advisor to Safe Bulkers. So, Loukas, welcome. As mentioned, that discussion will be mainly on company strategy and the dry bulk sector outlook. So let's start with the first question. Your Q2 2023 results were recently announced on July 26. As mentioned, we experienced a soft market in the second quarter compared to that of last year, which obviously accounts for the lower net income and EBITDA. But share with us, please, the major highlights of Q2 2023 in terms of market conditions and, of course, company performance.
Thank you, Nicolas, and good morning to all. It is correct that the market was weakened during the second quarter of 2023. Overall, we had the time charter equivalent of about 17,000. And the important thing to note is that we relied also on a number of charter contracts that were agreed in the previous periods. And just to remind you that while even today the market of capes is at about 15,000, we have all our capes chartered for 2 years at 22,000 average daily charter rate. The important thing to note is that we have strong liquidity. This is our important issue. We maintain a low leverage, about 35%, and we continue our dividend policy as it was declared in the past. We are paying our 7th quarterly dividend of 5 cents per share.
Loukas, thank you for this overview of the market and the company performance. Now let's move to fleet development, which is a key issue for Safe Bulkers. You and other members of the executive team have highlighted in many instances that Safe Bulkers strategy focuses on fleet environmental competitiveness. Now, what does this mean and why is it important?
What it means, back in the past, in 2019, 2020, we started a new build program, which overall on aggregate is 12 new build vessels. We have taken delivery of 4 vessels until today, and by the beginning of 2025, we will have 8 more to go. The characteristic of this vessel is that we have they are Phase 3, which means that they comply with a reduced energy consumption, fuel consumption by 30% compared to 2008, and which also corresponds to 30% reduction at least in CO2 emissions. And of course, you understand that if we have, let's say, this reduction, the vessel is substantially more competitive compared to the vessels in the market. The other part is that we have planned a very carefully environmental upgrading program of the remaining fleet, which includes low friction paints and ducts, various energy devices that are being installed during a number of dry dockings that we are doing this year. And this reduces the energy consumption by, let's say, 7 to 12%, depending on the type of the vessel. This is very important because, you know, in 2023, all the vessels will be classified in IMO categories and greenhouse gas IMO categories from A to E. And vessels which will be at the E category, at the E class, will need to do additional investments in order to continue their trading. So it's important for us to be able to compete on this level. And we will have by 2025 about 1/4 of our fleet Phase 3 vessels.
Loukas, if I can interject one question here. We talk about these vessels being more competitive. So for the average investor out there, what does it mean practically?
I mean, I would answer this twofold. First of all, when a vessel is more competitive, so it burns, let's say, less fuel, it means that it can gain more charter hire compared to a more heavy vessel, heavy burning vessel. The second point is that thereby there might be restrictions from charterers or several ports in terms of this classification. And I would say that vessels which are classified as E will not be wanted for transportation. Now, the most important thing that we all know is that already Europe, and this continues with United States and China and IMO, have developed taxation schemes. So we know in Europe we have the ETS and the fuel EU. All these taxation schemes are targeting to push the less efficient vessels out of the market. And we don't want our vessels to be out of the market in few years' time.
And I think it's worth mentioning not only that you are investing in energy efficient vessels, meaning lower consumption, but you have also installed scrubbers on a number of the vessels, which allow you to capture an additional, they have an additional impact on profitability.
Yes, look, this is correct. I mean, if you assume that we do not sell or acquire other vessels from now until 2025, about 1/4 of our fleet, let's say 12 vessels, will be Phase 3 vessels. 12 such vessels, 12 more will be eco ships built, which are quite efficient, also built after 2014. And by the end of this year, 20 vessels will be environmentally upgraded. So overall, the fleet will have a very good competitive advantage compared to other fleets, because you know that most of the vessels out there, the vast majority, do not correspond to any phase, and so we'll be able to compete. The other fact, as you mentioned, is that we have installed scrubbers in all heavier consuming vessels in all capes. There is another one that will be installed towards the end of this year or the beginning of the next one. And this gives us a competitive advantage, because from the 1st of January 2025, even Mediterranean will be an ECA zone where you need to use to burn low sulfur fuel oil 0.1%, which means that the advantage will be increasing as we go forward with these vessels. And this corresponds again to our ability to burn the standard fuel oil with 3.5% and reduce it through scrubbers to less than 0.1%, and which is cheaper. So this will correspond to our ability and our revenue.
So now you have also stated that you want to keep low leverage, but you have 8 vessels to be delivered, being built right now. So how do you plan to finance these deliveries?
Look, first of all, I mean, we have substantial liquidity and lines that we can use. The second is that, as you have noted, we have established a reasonable dividend policy, which was not excessive in the past, and we are directing a portion of our free cash flows to such investments, because the target is not to over-lever the company. And as we said, we already we were able to finance all these facilities from the existing cash or the one that has been contracted. Just to remind you, is that a part of the cash that we have on hand, the total capex is about 210 million. And the contracted revenues for the future years is about 232 million. So we have the ability to fund this. We have about 300 million in terms of liquidity. So I think that this can be done very comfortably, this financing. And another important thing to note is that the scrap value of our fleet is about is close to 400 million, while the debt is about 450 million. So even for a fleet that has on average 10 years old age, the value of the scrap is almost close to the value of the debt. So I think that we can feel very comfortable, and our investors could feel very comfortable on these things. One point additional that I would like to mention is that most of the fleets out there are aging. This is very important because I don't know many companies that will be able to maintain their age. So in 2025, we will maintain the average age of 10 ships if we don't sell anything. Although it will be, let's say, 2 to 3 years later, that we'll get 8 ships, 8 additional new builds that will be delivered from now until then. So we maintain the average age, we upgrade the fleets, we maintain low leverage. So I think that overall we should be a compelling story for our investors.
Loukas, let's move now to the buybacks. You recently announced the suspension of the share buyback program. So I wanted to ask you, what does this mean? Is the program terminated or is it just paused? And what were the reasons behind this decision?
Look, we always choose the price levels where we buy back the price, and the suspension doesn't mean that we will not have a buyback program in the future. Actually, we have executed a quite substantial buyback program of 10 million, and we have the approval from our board of about 5 more million on this respect. So we will do what it is needed. The company allocates its funds to the best of the circumstances. So if we feel that we need to enhance a buyback program, we do it. If we feel that it's a time to do an additional investment, we can do it. I think that there will be many opportunities that the market will give us, so we want to have a strong liquidity.
But if I understand correctly, the program has not been terminated. It is effective, just paused, and you can resume it whenever you feel that the opportunities are right. Am I correct?
We can always resume this buyback program, and the fact that has stopped now, it doesn't mean that there will be no buyback program in the future. On the other hand, what we are trying to do is that we want to see the market and how it develops, what are the opportunities that it will give us. We want to see how it will develop in September, October, and this will be a decision-making process on how to allocate the funds and whether we will let's say, go towards buying back our shares or do something different or do another investment, because the company itself is in a quite good position, I would say. I mean, we have the liquidity, we have the newbuild, we have low leverage, so we can do whatever we want. The allocation can change from time to time, but this doesn't mean that there is no intention to buy back more shares in the future.
So let's now move on to the dividends, which is another important way to reward your shareholders. You announced your 7th consecutive dividend quarterly of 5 cents per share. So annualized, based on current share prices, that's about 6% yield. Any remarks on your dividend policy?
Look, it was very, I mean, you know that our management has a share participation of more than 40%. So we will always be the first to want to maintain or to boost up the dividend. But we have said a couple of things always, that first of all, we don't want to undermine the ability of the company and its operations by providing extremely high dividends that we have seen other companies have provided in the past. What we want is that we want always to, we will never borrow money to pay the dividend. We always need to have free cash flows, in which we have contractual agreements that run for several years, and we want to maintain this dividend. I think we are happy, we are conservative with the dividend policy, but this means that we will be able to increase the wealth of the shareholders gradually through the acquisition of the new builds that we have done at substantially earlier stage. Imagine even now that there is a crisis, the Japanese vessels that we have ordered cost about 40 million if you want to order, and they will be delivered after 2025 or 2026. And we get all the vessels until then, and the average cost of these vessels is about 33 million. This means that there is an inherited advantage on our early ordering of such ships, and which at the end of the day, at some point, will pay back all shareholders who trust the company.
Very interesting. So, Loukas, now, since we talked about the fleet, you have 44 vessels in the water, 8 more coming. Any plans for additional fleet expansion? You always seem to be active in the S&P market.
Look, I always want to say that, I mean, we never stop to be active in any market. The question right now is that in the previous period, as you have noticed, is that we have ordered 12 ships. The question is what to do in the future, because there are several parameters and we need to examine very carefully what are the alternatives, so what will be the new fuels, so what will be towards which direction the market will progress. So we are constantly monitoring the situation, and we will see how we will react at the right moment. But just to let you know that we are not passive. Even if we are not doing anything, we are very actively monitoring and analyzing all the events worldwide.
So now let's go to essentially our last, but definitely not the least of the questions of our discussion, the dry bulk sector outlook. Now, when we read the news, it seems everybody wants to be in the dry bulk sector. You see listed companies that are not in the dry bulk sector expanding into it. You see a lot of buying of shares of other companies and so on. So it seems everybody wants to be somehow in the dry bulk sector and have bigger exposure to that sector. So can you tell us what is your take on the market outlook?
Yes, okay. I can analyze that in a let's say reverse way. The important thing here is that we have an order book, say, of about 6.5%. So the order book for the next 3 years is very low. The positions, the shipyard is occupied by other types of vessels, and if you go to order something in any shipyard, it will be 2026, 2027. So the question from the supply side is a self-answer. The important thing now is what the demand will do, and we have seen that gradually the increasing interest rates worldwide from all banks are imposing a barrier of increasing GDP. I mean, shipping and dry bulk shipping wants overall global GDP to go high, and when there are such fears, there are concerns about the chartering market. I don't believe this will be forever. I think that at a certain point of time, the problems, the inflation problems will be resolved. At a certain point of time, the global economy will start improving quite quickly, and so at that stage we will see the demand picking up. It will be a demand-driven cycle because the supply of vessels is already what it is. As you mentioned, the important thing that we have all noticed is that many companies, although without presence in the past in the dry bulk sector, have invested. And I would say it's somehow weird that all the dry bulk companies are trading substantially below NAV, while many ship owners, many ship owning companies are investing in dry bulks at NAV. At a certain point of time, we hope that this will, I mean, the gap will be reduced.
Yeah. So, Loukas, let me ask you the last question about the Ukraine. With Russia pulling out of the Ukrainian grain agreement, what does this mean for shipping?
Look, the trade in Ukraine in the Black Sea is important for grains, and this has an effect. On the other hand, the ships now have to go. Of course, the grains, the price of grains will increase because of the reduced production, and and the vessels need to go to long distances to bring grains back to, let's say, to Europe or to China. This is important because the distances will be increased. I've seen that the market recently is somehow improving. There are certain better assets for the fourth quarter, but we need to see what will be the development. The big picture always stays with China. China is a very important role, and India is playing also an additional role right now. But China is a very important role in dry bulk sector, and will continue to be like that for the following years. So we hope that more demand will be created there.
Any closing remarks before we finish our discussion, Loukas?
I would like to thank, first of all, you and Capital Link and for the continued support. I would like to thank all the investors that have seen this podcast and about the trust that they have to our management. I think we are always in the forefront of the technology. We monitor the situation, and we have created the last few years a very strong company with strong liquidity, with the ability with a low leverage, 35%, and with a fleet which is improving. It's upgraded with new technologies. We could continue to do that, and the target is to be able to be in the market on the basis of environmental performance, because this is something that has come to stay. It's not going to end shortly in 2 or 3 years. We have ahead of us 2030, which is a landmark that we need to achieve very substantial reductions, and the legislation worldwide will strengthen towards this direction, and we will be there to be competitive.
Loukas, thank you very much. So this concludes our discussion. We had the opportunity to discuss with Dr. Loukas Barmparis. He is the president of New York Stock Exchange listed Safe Bulkers. and this podcast will be available for replay upon demand whenever you want. Loukas, thank you very much for being with us today.
Thank you, Nicolas. Bye-bye.